Good day and welcome to Dilip Buildcon Limited Q2 and H1FY25 post-earning conference call hosted by Essential Technologies. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jeel Chandrani from Essential Technologies. Thank you, and over to you, ma'am.
Thank you, Neha. Good morning, everyone. Welcome to Dilip Buildcon Limited Q2 and H1 FY25 earnings conference call. From the management, we have with us today Mr. Devendra Jain, Managing Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, and Mr. Sanjay Kumar Bansal, Chief Financial Officer. Before we begin this call, let me mention the standard disclaimer. The presentation that we have uploaded on Stock Exchange, including the interaction in this call, contains or may contain some forward-looking statements concerning our business prospect and profitability, which are subject to some uncertainties, and the actual results could differ from those. Now I request the management to take us through the key remarks, after which we can open the floor for question and answer session. Now I hand over the call to Mr. Rohan Suryavanshi for his opening remarks. Thank you, and over to you, sir.
Thank you, Jill. On behalf of Dilip Buildcon Limited, I welcome all the participants in our Q2 and H1 FY25 results concall. The results and presentation have been uploaded on the stock exchange, and I hope all of you had a chance to look at it. At the outset, I would like to share some industry updates, and then I'll touch upon the company. So the infrastructure awarding activity in recent months has seen some deceleration. However, we anticipate a pickup in the near future, fueled by several initiatives like the PM Gati Shakti. Ministry of Road Transport and Highways has outlined a remarkable goal for FY25. In the Union Budget 2025, the government has high aspirations for the infrastructure sector with a view to making it a powerhouse in our economy. Road and highway transport was allocated 2.78 lakh crores. And despite a slow start this fiscal year due to election season and model code of conduct and the various ministries getting set up in place, MORTH is committed to finalizing these contracts as confirmed by the Honorable Union Minister. The Honorable Minister has stated that India will achieve the highest ever highway construction level this fiscal year, so we remain optimistic. As of August 2024, around 700 kilometers of projects were awarded, while 2,700 kilometers of national highways have been completed. Although this is lower than last year's pace, we expect a significant uptrend as awarding activities regain momentum. Another noteworthy development is MORTH's ambitious 1 trillion investment in 74 new highway tunnels spanning 273 kilometers. Notably, 35 tunnels covering 49 kilometers have already been completed, and this sustained focus on tunneling is poised to unlock further growth opportunities for our company. In other infrastructure news, in FY25, Indian Railways has allocated 1.74 trillion rupees for infrastructure, facility upgrades and safety enhancements. Similarly, Coal India Limited is advancing 119 projects, adding 896 million tons in annual capacity with rupees 1.33 lakh crores using advanced technology for productivity and sustainable mining. Even from an outsider perspective, according to Morgan Stanley, investments in India's infrastructure are projected to grow at an impressive 15.3% CAGR over the next 5 years, amounting to an estimated $1.5 trillion in cumulative spending. This investment wave will significantly boost India's growth trajectory, reinforcing its position as an emerging global economic powerhouse. Now coming to the sector and the company. During the quarter under review, ordering activity was weak across all sectors, which was expected because of elections, but now it is expected to pick up going forward. Just like in the past years, quarter 3 and quarter 4 specifically gets heavy ordering. On the back of our strong order pipeline and our presence across all infra segments, we're expecting a good order flow in the next few months. Currently, over 1 lakh crores of NHEI and MORTH orders are already floated and expected to open in this financial year. In this, there is about 70% HAM and 30% EPC. Besides these rolled orders, company is also looking at opportunities in other sectors where we are evaluating orders of rupees 90,000 crores. I'm happy to announce that we got our first breakthrough in optical fiber laying business by securing first order of BSNL in partnership with STL of about rupees 1625 crores. In this order, our share is about 70%. Also to update, as I mentioned last time, there were certain challenges in the JJM projects, money coming through. We still continue to face those challenges, even though it is of an improvement trajectory, but the situation has still persisted in this current quarter as well. We're expecting more improvement and relief from the next quarter, this quarter and next onwards. Now, in continuation of our vision of Build 2.0, I'm happy to report that our long-term revenue-based business is growing at a fast pace. This plan envisages predictable free cash flows, improving return ratios, and zero debt on a standalone basis. So when you look at DBL going forward, you will have to look at the consolidated numbers to get a better perspective. Even in this quarter, we have achieved the highest ever quarterly PAT on a consolidated basis. Our focus is to keep increasing this. But in the same breath, if I have to give you guidance on the standalone revenue for this year, given that the order inflow has been weak till now, we're expecting a degrowth of around 10% in FY25. The EBITDA margins are still slated to be in the 11-12% as we had indicated earlier. However, the consolidated margin will be higher than last year. Let me reiterate that. The consolidated margin will be higher than last year. The debt reduction guidance on a standalone basis for this year may change slightly because of lower revenue and lower order inflow. But it will still be reduced from the past year debt. So the key takeaway here is that DBL is still focused on being a net debt zero company as we had indicated earlier, even if the timing is postponed by 6 months or so. But our target still remains the same. Now coming to our investment portfolio of HAM assets, I'm happy to inform that recently we have fully concluded the Shrimp InvIT deal with transfer of 51% equity stake in the last project. With this, our entire deal with Shrimp is concluded, and we will continue to do the O&M of their assets for the life duration of those assets. This provides us with long-term assured revenue stream, and this O&M revenue stream will keep on increasing as our own InvIT asset pool keeps getting larger in size. To talk about our own InvIT as well, and to give you an update on that deal with Alpha, we are progressing as per the plan. Till now, we have transferred 26% stake in 7 assets out of a total deal of 18 assets. These 7 assets have received COD and the annuity has started. One more asset will receive COD in this month, post which it will also be transferred to Alpha and eventually to the InvIT. This will conclude the first tranche of Alpha deal. Our InvIT formation process is also progressing well. We have received SEBI approval for forming public InvIT. Now coming to our coal business, our coal MDO business is on an accelerated execution path. I'm very happy to report that we have achieved production of 10.2 million metric tons in the first half of the year as compared to our target of 22 million metric tons for the full year. We are also confident and on track to beat this target by at least 10 to 15%, meaning we will end up doing this year with almost about 25 million metric tons of coal production. Now, with this update, I would like to hand over the call to our CFO for the financial overview. Thank you.
Thank you, Rohanji. Good morning, everyone. I welcome all our stakeholders to our earnings call for the quarter ended 30th September 2024. Let me present the standalone and consolidated results of Dilip Buildcon Limited for the quarter and half year ended 30th September 2024. On standalone basis, on YOY basis, revenue decreased by 10.3% to rupees 2,177 crore against 2,427 crore in quarter 2 FY24. The EBITDA decreased by 24% in quarter 2 FY25 against 294 crore EBITDA in quarter 2 FY24. Profit after tax increased by about 8% in quarter 2 FY25 to rupees 129 crore against 120 crore in quarter 2 FY24. Now, let me update on the consolidated performance of Dilip Buildcon. The revenue on YOY basis decreased by 13.6%. To rupees 2,461 crore in quarter 2 FY25 against the revenue of 2,849 crore in quarter 2 FY24. The EBITDA increased by about 47% in quarter 2 FY25 to rupees 500 crore from 340 crore in quarter 2 FY24. And this is mainly due to better performance of our MDO business and completed 6 HEM projects at the end of 30th September 2024. The profit after tax is also increased by 263% to rupees 266 crore in quarter 2 FY25 against rupees 73 crore in quarter 2 FY24. The consolidated performance for half year basis YOY. So the revenue decreased by about 3% in H1 FY25 to rupees 5,595 crore from rupees 5,769 crore in H1 FY24. The EBITDA increased by 33% to rupees 977 crore in H1 FY25 versus rupees 734 crore in H1 FY24. The profit after tax increased by 374% in H1 FY25 to rupees 406 crore from rupees 85 crore in H1 FY24. This increase in profit after tax by 374% is mainly due to the better performance of MDO business, completed 6 HEM projects, and exceptional items of rupees 158 crore. Thank you all, and now we can open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participant, you may press star and 1 to ask a question. The first question is from the line of Kunal Ochiramani from Kitara Capital. Please go ahead.
Hi, sir. I just wanted to ask, like you told, you are evaluating some orders of 90,000 crores in other sectors. We are well diversified. How to look at your company at 5 years perspective as to how will we gauge the order book, and as our realizations or let's say the conversion is going down this year, there's a dip in revenue this year. How do you see it in next year and next year up?
Kunalji, a great question. When we're looking at DBIL 5 years down the line, how should we envisage this company? So I think there are two sort of distinct ways that you'll have to look at the company. One is DBIL as a short-term revenue and DBIL on the long-term revenue basis, as I mentioned. The short-term revenue will be the EPC projects that we do. These are typically 2 to 4 years timeline projects. And this DBIL will continue to do because of all the inherent engineering and execution capabilities that we have built over the last few years. We have our own equipment bank, our own people, all the credentials and an experience of having worked in all around 22 states now. So we will be continuing to do work in all those states, in all the sectors that we are already doing, and we may also add some more depending on what new opportunities are presented by the government in the country at that point of time. So we'll continue to, because at the end of the day, the trick, or I guess the biggest thing of doing any infra project is the execution capability, and where we are very confident of being able to manage all those nuances of a project very well. So that will be one part of the DBL that will continue to keep growing. The second pie, which we mentioned and which will set us apart in the sector and in this area, is that we are focusing on a long-term revenue business model as well. So there will be an increasing share in both our revenue and, more than that, our bottom line from the long-term business. These businesses, the two pillars of those business will be, one will be the coal business, where 4 or 5 years down the line, we will be possibly the second largest, maybe after Adani, in terms of the coal production that we'll do. Because we'll be doing almost 60 million metric ton of coal production by that time. Currently, in this year, we will do about 25 million, but at that time, we'll be doing about 60 million metric ton of coal production, which will give us a clear revenue of about 3,500 to 5,000 crores of revenue coming from that sector. So that, and this is without accounting for new projects that we are already bidding for. I'm just talking about the current order that we already have. So when I say the 60 million metric ton of coal production, this accounts or amounts to almost 10% of the Coal India current production. So that is the scale of operations that DBL will be sort of doing that. And as we add more mines to it, this will keep on increasing. The second bit of this long-term revenue pie will be our InvIT business, the one that we're setting up with Alpha. The 18 projects that we've already committed there already gives us about equity valuation of our 74% that we'll be holding of about somewhere in the range of 4,000 crores, which will give us 400-450 crores of cash flow every year. This in the next 5 years will also increase because we will add more HAM projects of our own. Also, the InvIT will be procuring more assets from market. So our revenue from that will also keep on increasing. So if I look at plan, my two large sort of fixed businesses alone will be throwing out an EBITDA of more than 1,500 crores easily. Like when I'm talking about the coal and just the InvIT business. Besides that, whatever revenue we do on the standalone basis will again, let's say even if you're doing like some 8,000-10,000 crores of revenue, let's assume at the same current ratio. Again, if you imagine 10-12% of EBITDA, it will again throw out that additionally. So we will have not only increase that bottom line, but we will also have very predictable and assured long-term cash flows, which in this sector and this industry is difficult to find. So our learning after COVID was we want to build an institution where there are long-term predictable cash flows and we can continue growing that business year after year. So that was the idea of, and that's where we see ourselves in 5 years from now.
As to how we see as the company is, when we value or when we see our coal business and InvIT business is fairly estimatable, that we can estimate and we can arrive at a value, or we have some visibility on the business. Can you comment something on EPC side as to how will our order book grow, or some internal estimates you guys see that at least 10% or some ballpark number you have in mind?
So DVL in the past was obviously known for a faster growth rate, where we would also investing a lot in our both our bank facilities and also investing in equipment. Going forward, as we've indicated, we are really targeting a growth of 5 to 10%. So that is the growth rate that we will continue to target. Now, when it comes to a 5-year plan around what are the businesses, that question is better asked to the government, because they're the ones who planned out. They have laid out a vision. If you look at the last 10 years of this government, they have kept on increasing the infrastructure budget year on year. When in 2014, the total infrastructure budget was about 2.5 lakh crores, or somewhere in that ballpark. Last year, it was about 10 lakh crores. 11 lakh crores. This financial was 11 lakh something crores. So this pie will keep on increasing. And as this pie keeps increasing, our business should keep on increasing, as we have also gone into different sectors. So that's how it will look, sir.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Thank you very much. Sir, just a couple of questions on the pure construction part. You have explained very well on the MDO and the InvIT part. So first is this BSNL order. So what would be the 70% EPC value excluding GST for us?
Shravan, the total order value is 1,625 crore, and we have 70%, about 75% work basically allocated to us. And this value is basically construction, and thereafter around 7 years there is a O&M also. So there will be additional revenue from O&M also, which is not included in 1,625 crore.
Okay. So here also the 18% GST is there.
Yes.
Okay.
This is exclusive GST, sir. This number that you see, 1625, is excluding GST.
Excluding GST and the O&M value, which is
about 925 or something, 975 crores. So about 1,000 crores of O&M will also come.
Okay. And sir, you have mentioned that is including the GST. 1625 crore is including GST.
I don't think so it's including GST, but we'll
no issues. So
our CBL part is 70% in the execution and the O&M. So O&M is also 975 crore above the 1625.
Okay, got it. So now broadly, in terms of order inflow for this year, so you have highlighted even 90,000 crore tenders you are evaluating. So if you can also help us in terms of sector-wise breakup, which are the segments, and also road also, if you can help us, what's the pipeline and what we are looking at. So net 1,100 crore plus this 1,200 odd crore. So kind of a 2,300 crore kind of order inflow that we have already received. So how much more we will be looking at for this year? So 16,000 crore last time we said that we are looking at in terms of inflow. And also just to clarify, out of this, are we also including the MDO mining inflow that we normally take? So that is also included in this, whatever the full year order inflow we are looking at.
Sir, when we speak about new order inflow, when we mention 15 to 16,000 crores, that means the new order that we are targeting this year. It doesn't include what have already we won, number one. Number two, the target remains to be in that zone only, that 16,000 crore target that we mentioned. I obviously can't give you a breakup of all the sectors, or a piece-by-piece breakup of all the sectors that, how you were expecting. But the current sectors that we're working in, these orders are in all those sectors, and we are looking at those orders. So that's the key takeaway. Unlike, even in the past, we've never given like a detailed breakup of each sector's this thing. The road sector we do mention. The other sectors will give you an overarching picture, and that we are bidding for these projects. So that's what we're trying to do here also.
Okay. And now in terms of the date reduction, so just to get a more clarity, so which has increased close to 700 crore plus in 1H at a gross level. So how one can look at in FY from now onwards, how much more reduction we are looking at by March end, and in terms of the net debt free by FY26, so that remains intact?
Shravanji, the debt is primarily increased because of the working capital changes, especially the delayed receivable from JJM projects and the accumulation of the GST and TDS credit. And we have faster paid to creditors. So in all, we have basically invested in working capital around 700 crore, and corresponding debt has increased. In terms of debt reduction, Rohanji already detailed in his speech. Rohanji, please.
Shravanji, we, like I mentioned in the speech as well, our target still remains to reduce debt. While we will be able to achieve the earlier number that we have done or not, remains to be seen. We are optimistic, but even though if we rationalize it a little bit, to take a prudent sort of look at things, we will reduce the number of debt, the amount of total debt will be lower than last year's debt. So that is for sure we are aiming, even though it might not reduce to the level that we earlier thought it will. And primarily because we didn't get the orders that we thought we will, which would have culminated into revenue and improved our margins. Number two, when you get new orders, you also get the mobilization advance, which culminates into changes in of the older projects where mobilization advance is getting cut. So there is always a sweet spot which continues going there. So that's why.
And Shravanji, let me add to Rohanji's, what Rohanji said. So this is temporary phenomena. Our debt-free company, the estimates are printed. So what we envisaged in past, the company will be debt-free on the similar lines.
Okay. So net debt free. So will it now? Are we saying that we can be a net debt free by even FY27 and may not be in FY26?
Yeah, sir. If not FY26, so FY27. So like 27 is where we will do it. So that's why I said there is a postponement of of this trajectory that we had started on because of the things which are outside our control. The lower order sort of inflow that came in and all of that, and revenue that got hit. But the trajectory still remains the same. There is no plan to sort of change this or do anything else. The trajectory you will see year on year happening.
Okay. And what was the DBL infra date? Was it the similar 650 odd crore around September?
Yes. So the net debt at DBL infra asset level is 645 crore.
Okay, got it. And so broadly, in terms of the whatever we are looking at 450 odd crore inflow to the as a dividend and plus interest and everything. So how much broadly? So this 1H how much we have received and at standalone level, and if possible, how much more we are looking at in the second half, and then maybe FY26 if you can help us there.
So Shravanji, the total inflow, what is projected to be received from the overall unit holding in SIM Innovate is around 95 crore. Out of that, around 45 crore has been received, and it is in 60-40 ratio, 60% in DBL and 40% in infra asset.
Okay, got it. And then this alpha alternative will start from FY26 onwards only.
Yes.
Okay, got it. And just to recheck in terms of the capex, just a 46 crore we have done. So for full year, at standalone level, how much we can look at?
Shravanji, the total capex in FY 24-25 would be around 150 crore. So total 116 is already incurred.
Okay. Got it. And sir, when we say now we got the SEBI approval for Buildcon, so does that mean that it will be listed on the stock exchanges?
This is trust approval, and there will be the lawyers and the bankers are creating the document. So it will be filed once ready. So our plan to launch the InvIT will remain intact.
It will be listed on the exchanges, sir.
So maybe 6 months down the line, one can look at this will be listed?
Yeah, 6 months or so, sir.
Okay. Got it, sir. Thank you and all the best.
Thank you. The next question is from the line of Deepak Puswani from Swan Investments. Please go ahead.
Hi. Good morning, sir. So just wanted to check it out on two questions. Firstly, on the net debt front, we mentioned it has got delayed by 1 year and we are looking at net debt free by FY27. What is the expectation by end of FY25 at the current juncture now? Earlier we were saying it would be around 1,000 odd crore. How should we see this year we would be closing it out? Hello.
So, Deepak, the net debt at end of 24 was 1,515 crore. Today, the debt is increased because of the delayed receivable. We are expecting some relaxation. So, there will be reduction in FY25 end, but we can't promise a higher number, but it will be definitely reduced from the level which we had on 31st March 2024.
Okay. And secondly, it's good to see there is a sharp ramp up in the MDO business. I think volume on the overall basis has increased to 10.3, which is close to last year volume in the first half itself. If you can also share the revenues and EBITDA, how much has been the total revenue from the MDO business in first half and what has been the EBITDA?
Because we don't share the entity to entity EBITDA. So I detailed out in my presentation. The increase in console performance is because of these factors, the MBO business and the completed HEM projects.
Okay. And in terms of the further ramp up in the production of MBO, how should we look into the full year as a whole now currently? And what should be the expectation over the next 2 years for the MBO business?
So MDO, there are two MDOs, Siarmal and Pachwara. Pachwara, there is a fixed production of 7 million ton. We will be achieving this year, and this 7 million ton will continue for 55 years. So the performance what we will do this year will continue for next 54 years. In terms of Siarmal, this year originally we have indicated target by 15 million ton. And as Rohanji detailed out in his presentation, we will increase this production by 10 to 15%, meaning 17-18 million ton this year. So total in total, it is 24-25 million ton this year MDO business, and next year it will rise by another 10 million ton. So and in FY28 we will be doing 60 million ton as Rohanji said.
Okay. Thank you. Thank you and wish you all the best.
Thank you, Deepak.
Thank you. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
You are audible.
Yeah. So, sir, earlier you had, if I'm not wrong, you had guided for a 15,000 crore kind of order inflow. So, are we still expecting that?
Yeah, we have guided for an order inflow of 15,000 crores just last year. I mean, for this financial year.
Sorry, sir, I did not get you. Sorry.
You're saying we have guided for a 15,000 crore order inflow, right? That's what you asked for? Yes, we have guided for that.
So are we still on track, or do we see some softness?
Yeah, we are optimistic on that number because there's still the larger orders have not sort of been bidded out, and we are bidding for them. So we're already sort of working on those orders. Like I mentioned, there's almost a 2 lakh crore order pipeline that DBL is currently evaluating. So we are fairly optimistic that we should be in that range. And out of that 15,000 crores, we've already won orders about 3,000 crores till now. There's 12,000 more crores that we need to win.
Okay, great, sir. And on the margin front, sir, there was some softness this quarter. So was it due to the seasonal nature, or what was the reason? And are we optimistic for that 11-12% kind of a margin?
Yeah, the margins were soft because of seasonality and also because of lower execution. However, we have guided towards an 11-12% margin only for the year, keeping in mind some of these things. So that is how you should look at the year on a standalone basis.
Okay, sir. And would it be possible to give a light on the margins in the MDO project that you are doing? What would be the ballpark number for margins there?
Sir, we don't share margin sector by sector. We only share like the company margins.
So strong, you mentioned that you will be getting around 1,500 crores of EBITDA these long-term projects, right? The InvIT and the MDO project, right? You did mention that.
Yeah, so those we've mentioned those three, like the two items, the inflow from InvIT and the MDO business. You're right.
So much and all the best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vaibhav Shah from JM Financial Limited. Please go ahead.
Sir, so we are guided for a 10% decline in terms of revenue for FY25. So given the lower base now, so can FY26 see a better growth, or it should be in the range of, say, 5 to 10 odd percent?
Yes, sir. Obviously, it will see because we will have the orders that we have guided for. So once that execution starts, there will be a ramp up in revenue.
So any particular guidance from your end in terms of revenue growth?
Sir, I think to give you a better perspective on that will be when end of the year we're sitting with our order book and where we are exactly. We'll give you a better precise number rather than shooting in the dark right now with still expecting for orders.
Okay. And over a longer term, say 2 to 3 years, our margin should be in the range of 11 to 12%?
Yes, sir. Easily it will be in that 12% and all. It will be easily there.
Okay. Thank you, sir. Those are my questions.
Though we should look at the console numbers going forward, like we mentioned, because all of it will not be captured on the standalone, the margins that the company will be making. So we should start also paying closer attention to the console numbers as we go forward, sir.
Okay. Thank you, sir. Okay.
Thank you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Sir, firstly, if you could explain to us the BharatNet project which we have backed in consortium with Sterlite. What is our scope of work here, and for the O&M part also, the proportionate of 70-30 holds good?
So the scope of work there is the trenching and laying of the cables. That is what we'll be doing in execution, and it's a maintenance of the same and in O&M.
Sir, I missed your point. Come again, please.
Sir, it's the trenching and laying of cables and the O&M of it.
Okay. I mean, the O&M and also the 925 70-30 ratio prevails similarly.
Yes, sir.
Okay. But sir, taking into account the realm of things and the space where we are, what drew us to this 1,215, 16, 1,800 crore order in a totally different field altogether. All those are, I think, so we bid it for eight of the packages, but we were awarded one. So if you could just give us some color on the experience and we have garnered from this type of participating in the project, and how does it make that a significance for us to diverge into these businesses or these line of operations?
Sir, obviously we had bid together. We and STL had bid for all the packages. Unfortunately, we did not win more. So our idea was to obviously do a bigger portion of this. Now, coming to what is the work and expertise, this is a very simple job compared to a road business or any other infrastructure business that we do, whether it is metro or tunneling. All of it is far more engineering-wise, more complex. This is a simple trenching, digging up of a hole and then laying that. So we already have the equipment for that and manpower. So it's a very simple job that we will be doing, and this kind of stuff we already do on our road projects and all. So it's a very simple sort of project execution where we already have all the equipment and people. So that's why we were doing it along with this STL.
Okay. Sir, when we look at being one of the MDO operator for the coal mine part, what is the total? How many players have been garnered the project, or are we singly operating the mine?
So I didn't understand the question, sir.
Sir, I was trying to understand whether in the coal mine part also there are a lot of players operating in as MDO, or are we the sole people?
Sir, there are people in the coal business as well. They are very separate than what we see in the road business. There are separate set of players in the coal MDO business, and because it has a different set of challenges, so there is decent competition there as well.
Sir, I didn't get the point. Sir, I was asking that as an MDO operator for the mines where we are operating, and we are also alluding to the fact that going ahead we will be the second largest MDO operator for coal mines in India after Adani. So in this project also we are garnering the total output for our client as a single person, or here also we have formed a consortium and we are sharing a part of it?
We have two MDOs, one 50 million ton every year and 7 million ton every year. This makes to 57 million ton. So today we have two principles only: PSPCL for Pachwara and MCL for Chairman project. So with these two we will be achieving about 60 million ton. And there are other set of MDO players in market like Adani and others. So there are few people working in MDO segment as well.
Okay, sir. And sir, what explains the increase in capital work in progress at standalone number also, and if you could give the breakup for the console part also, the capital work in progress figure.
So in terms of capital work in progress in console, first standalone basis, it is 80 crore. This is part of our 150 crore total capex this year at standalone level. And in the SPVs, the HEM SPVs, the capital work in progress is HEM capital work in progress, and one part of MDO. So in CRML, we have capital work in progress for the project capex, which is already approved by the authorities.
Okay. And lastly, sir, we have also heard from BSNL, in fact, that one of the tender participants has even approached the court to challenge the tender process having unfair practices. So are we aware of this? This is a notification from BharatNet, from BSNL itself, dated yesterday, 13th November.
So, Vaibhav, we are not aware about any objection made by any participant in the tenders.
Okay. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So in the last call, we had shared that we were going to receive around 477 crores from Alpha during this year. But it looks like the timelines have been shifted to FY26 and 7. Would like to know, is there any possibility for these cash flows, to go beyond FY27 as well, or are we fully confident that we will receive these cash flows in the set timelines?
Let me correct basically the last year's last quarter presentation. 477 crore was shown from the 8 assets. So balance 5 assets we have shared. 477 crore will be received. Out of that, only 61 is pending. You refer the line on page number 28. Only from 8 assets, and the another line is added for the another 10 assets, 26%, which is 550 crore. So that 10 assets is still not complete. So once the asset will complete, this 550 crore is additional to the 477 crore. So out of 477 crore, only 61 is pending. Others already received.
Okay. So we are saying that around 400 crores has been received basically.
Yes.
Okay. My bad. Okay, got it. Thank you very much.
Thank you. The next follow-up question is from the line of Shravan Shah from Dilip Capital. Please go ahead.
Sir, I just wanted to check when we are saying our net debt, even if we are saying some reduction will be there on YY basis, so that means close to 800 crore kind of a reduction that we are looking at in the second. So can you help us how this will be done?
So one is basically we are expecting the unlocking the working capital what we invested in first half. So it is basically the JJM project and the TDS and the income tax refund. So basically the original position will be restated by 31st March 2025 and further reduction from the operational cash flows. So we said from the FY24 level there will be slightly reduction in as of 31st March 2025.
Okay, got it. So in terms of the 1H, in terms of standalone, the finance cost is close to 242 odd crores, so 122 crore quarterly. So at least for next 2 quarters, the similar run rate will be there.
So Shravanji, I would say little bit relaxed from the first half, not very significantly down, but yes, it will be in the range where we are in H1.
Okay. And sir, in terms of the inventory days, so obviously we are trying to reduce, but do we see that any material reduction is possible, let's say even in next 1-2 years?
Shravanji, we are working for each and every balance sheet item. So yes, there will be reduction in working capital days going forward. I can't tell you whether it will be in inventory or debtor, but yes, there will be net working capital days will be reduced by some extent.
Okay, got it. Thank you, sir, and all the best.
Thank you, Shravanji.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Thank you, sir. Sir, for the margin profile for the BharatNet project, can you explain to us how the margins will look like?
Then we try and build all projects on the similar margin profile. So what we have indicated towards, this project will also have that kind of margin profile.
So this 11 to 12% EBITDA margin is what we are eyeing even for this BharatNet project?
Yes.
Okay, sir. And sir, since you yourself mentioned that we have bid in consortium with Sterlite for all the projects, so is this margin profile the key reason for so many people participating for these packages, or what has led to you garnering only one of the same and not getting further, even though your partner is has an expertise in laying of OFC cable?
So we are also evaluating, but that is life. When you bid for a lot of projects, even on the NHI roadside, we end up winning 5-6% of the projects that we bid for. So similarly here also we had bid for enough, but we didn't get. So it's just hard luck, tough luck. It's the nature of L1 business, and that's how it kind of works. Either you work on your margin profile or you reduce your margins, and then you can get more orders.
Okay. So you have also spoken about delay in receivables. So which entity, government entity, has delayed in releasing the funds, and in which projects?
Jal Jeevan Mission projects, there the central government has not released their share to the states, which is why there is a delay. So, and this is across many states, in fact all states where JJM projects are going, the central government has not released its part. Only the state governments have been doing their part, which is why there is a build-up of sort of these receivables from the government in these projects, and this is across for all players across all states.
Okay. And what are the reasons the government have highlighted for these non-compliance from their end? Are we not getting any milestone?
Yes, there's an increase in budget, but you are asking the wrong person that question. I think you should be asking the government that question. What are the reasons? I only know that there is an increase in budget, which is why they are sort of evaluating how to and sort of stating the budget and getting more approvals there. That's the reason that I know. If there are more things that are happening in the background, I am not privy to that. But you should definitely reach out to the government and ask them why has there been a delay in the payments.
Okay. And so lastly, on the Amrit 2 scheme also, wherein the river linking projects have also been showcased. So what is in your bid pipeline? Do you have the river linking project of the central government under the Amrit 2 also, wherein we are participating or we are keen to bid for?
Sir, whenever these projects come and they fit into our project profile, so if they fit into our project profile and the kind of project that we look at, then we'll obviously bid for them. That's all I can say on that matter right now.
Okay, so we have not exactly bid as of now for these river linking projects.
No, sir, we've not.
Okay. Thank you, sir.
Thank you, sir.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to Mr. Rohan Suryavanshi for closing comments.
I thank all the participants to come and ask all the questions that they had. We are, if anyone could not get their questions answered, please feel free to reach out to our IR or our team, and we'd be happy to give you more information on that. I look forward to seeing you guys in the next quarter, in the next year. I wish you all a great new year, and I hope all of you had a phenomenal Diwali. Thank you all from everyone here at the DBL team.
Thank you. On behalf of Dilip Buildcon Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.